Louis Vuitton is down 5%, Kering down 13%, Gucci sales since 2022 cut in half. Hermès, same year, grew 9%, Cartier's parent grew 14%. Same year, same China and same Asia, but different results. Every analyst writes the same explanation: demand normalization in Greater China. If it were China, every house would be bleeding the same way, but they're not. Something else is happening. It's not on page 1 of the annual report. Let's actually open the filings. If you read the luxury trade press over the 18 last months, the story is consistent. China happened. Chinese consumers got anxious. The property crisis, cautious employment, a wealthy urban class that post-pandemic stopped showing off. The numbers from China are real. Greater China luxury spending fell. Tourist flows shifted. The Lunar New Year base became hard to comp. This is all true. But here's the parts the press skips. Listen to how the houses report it. Earnings call after earnings call. Same phrase. Demand normalization in Greater China. Bernard Arnault said it. Kering management said it. Gucci's CFO said it. Even Chanel, which is private and doesn't take analyst calls, said it in 2024 results release. You'd expect a phrase repeated that consistently to mean the same thing across every house, but it doesn't. Because while Louis Vuitton was saying it's about fashion and leather, the very same Louis Vuitton was reporting a 3% organic growth in watches and jewelry. That's Tiffany, Bulgari, and Hermès. That's the same group, same region, and same Chinese consumer. If the issue is Chinese consumers, why does it only show up in the bag department? And if you look at Kering, the same parent company that lost 22% in Gucci grew 22% in Kering Jewellery. The segment that contains Boucheron, Pomellato, and Kering, the same parent, same supply chain, same regional footprint, plus and minus the same number. So when management gets on the call and says Greater China demand normalization, what they actually mean is something more specific. It's not all of China. It's a specific kind of customer in China, and in the US, in Europe, and in Japan. The same customer who, 3 years ago, was the engine of every house growth. What happened to her? That's the question this video answers. Start with the comparison that breaks the consensus story. LVMH Fashion Leather Goods. The biggest, most powerful, most diversified fashion division on earth. Louis Vuitton, Dior, Celine, Loewe, Fendi, Loro Piana. In 2025, revenue was $33.8 billion, down 5% on an organic basis, the first full-year contraction in over a decade. Operating margin, which used to sit around 40%, compressed to 35%. That's the press release version. Demand normalization. Tough comps, currency. Now look at Hermès same year, $16 billion in revenue, up 9% organic, up 13% in leather goods and saddlery, which is Birkins, Kelly's, the whole bag franchise. 42% of Hermès revenue comes from Asia Pacific, the highest Asia exposure among the big luxury houses. If China demand was the actual problem, Hermès should have been hit hardest. They weren't. The Hermès operation margin in 2025 was 41%. LVMH Fashion and Leather, the most profitable fashion division for 15 years, came in at 35%. 41 versus 35, same year and same region. You can repeat this comparison at any level you want. Same parents even. Take Kering 5 years ago. Gucci was the single most valuable fashion brand in the world. In 2022, Gucci revenue was over $10 billion. In 2025, around $6 billion, down by nearly half in 3 years. And in the same company, in the same Q1 2026, Kering Jewellery, which is Boucheron, Pomellato, and Kering, grew 22% on a comparable basis. 22% up, 22% down, from the same company. Then Richemont, Cartier and Van Cleef's parent. The third quarter of their fiscal 2026, ending this past December, Jewellery Maisons, the segment that contains Cartier and Van Cleef, plus 14% at constant exchange rates. Specialist watchmakers, which contains everything else, plus 7%, a recovery from minus 11% a year earlier. 3 different companies, 3 different categories, one pattern. The houses selling to a customer who can't be talked out of a Birkin or a Cartier necklace by a price hike are growing. The houses selling to a customer who can are not. Now zoom out, past the houses, to the whole industry. Bain Company tracks the global luxury customer base. The report published November 2025 contains the most important number in this video. In 2022, the global luxury customer base was 400 million people. By the end of 2025, it was around 330 to 340 million. Between 50 and 70 million customers stopped buying luxury in 3 years. It's the first time in the 23-year history of the Bain reports that the customer count contracted, and inside that contraction, the data gets sharper. Of the customers still in the market, only 40 to 45% made a luxury purchase in 2025. In 2022, that number was 60%. People are still walking past the stores. They're just not walking in. But who exactly left? Aspirational buyers. Bain's term for customers spending under 5,000 euros a year on luxury. In 2010, they were 75% of the market. In 2025, they're 60%. The rest of the market increasingly is just the top. Inside that aspirational pullback, the data splits further. 45% of Chinese aspirational buyers cut their luxury spending in 2025. 30% of Western aspirational buyers did the same. So yeah, the pullback was sharper in China. It's also not only in China. The customer in the US, Europe, and Japan walked away too, just at a slower pace, which lets management keep saying Greater China with a straight face. The top 0.1% of luxury clients now generate 37% of total luxury value. They spend, on average, 360,000 euros a year on personal luxury goods. Industry EBIT margins, which peaked at 23% in 2012, are now 15 to 16%, the same level as 2009. In the depths of the financial crisis, Bain estimates the industry lost $100 billion in enterprise value over the last 12 months. The pattern is consistent. The houses that sold expensive things to the rich grew. The houses that sold accessible luxury things to the upper middle class did not. The question nobody on the earnings call answers is why. The answer is on a different page of the same income statement, the page that lists pricing. In 2019, the Chanel Medium Classic Flap Bag in the US retailed for $5,800. In 2024, the same bag retailed for $10,800. 86% increase in 5 years. The Louis Vuitton Neverfull, the entry pontoon in the Vuitton lineup, the bag that was nearly every aspirational buyer's first LV. In one price increase in February 2022, it went from $1,690 to $2,030, 20% in a single night. By 2024, the Chanel Classic Flap had nearly doubled in 5 years. The LV Neverfull had tripled over 15. Gucci's Marmont, Bottega's Cassette, Balenciaga's Hourglass, Dior's Lady. It's the same pattern everywhere. 2021 to 2024. The houses now collapsing raised prices on their flagship leather goods by 30 to 40% in dollar terms, with some Gucci Marmont substyles up 21% in Europe in a single 2023 cycle alone, on bags whose customer was the definition of aspirational. Now Hermès, same period, Birkin 25 in Togo leather, 2019 retail, $9,850, 2025 retail, $12,700. That's a 29% increase over 6 years. Hermès raised prices. They didn't pretend not to, but they raised them at less than half the pace of the houses now collapsing, and they raised them on a customer who could absorb it without trading down. The aspirational customer, the one Bain says is leaving the market, was paying $5,800 in Chanel Classic Flap in 2019. She wasn't priced out. She was the customer. She bought the bag. She wasn't going to pay $10,800. That's the math. China is still the alibi. The houses repeat demand normalization in Greater China on every call because we raised prices 40% and our customer left. Doesn't fit in the earnings script. Chanel reported their 2024 results last May. Revenue down 4.3%. Operating profit down 30%. 30%. Chanel CFO, Philippe Blondiot, then announced that for 2024, they raised fashion prices just 3% after years of double-digit hikes. Some restrain. Sure, but the customer was already gone. The freeze didn't bring her back. It just stopped pushing her further out the door. And the same week, LVMH reported its negative 5% organic year in fashion and leather. Louis Vuitton raised US prices again, April 2025, then again in August. That's the story. Not China, not micro headwinds, not creative direction, not tourist flows. The houses collapsing trained their growth on the aspirational buyer who could be talked into stretching for one more bag at $4,500. They raised the price to $9,000. She stopped stretching. The house's growing never depended on her in the first place. So what happens next? The consensus view is that 2026 is the recovery year. China reopens, tourist flows return, demand normalizes back. Bain's own forecast is for 3 to 5% sector growth this year. If the thesis in this video is right, that's wrong. Aspirational buyer destruction isn't fixed by Shanghai consumer confidence. It's fixed by either bringing prices back down, which no house has done at scale, or by repositioning the brand around a different customer. Kering is trying the second path. Demna at Gucci, a creative reset, new leadership. Whether it works is the most interesting question in luxury for the next 2 years. The houses that never overshot stay fine. Hermès, Cartier, Van Cleef, increasingly Bottega under its quiet luxury positioning. The houses wearing it out at peak prices, expecting the customer to come back at the same price point that push her out. Do not. That's the bet you're making when you own Kering at the current price, or LVMH. Either the customer comes back at the price, or the brand resets. There is no third path that pays. 2 reads on this, both defensible. A. The aspirational buyer comes back when the macro improves and Chinese consumer confidence returns. Prices hold, recovery follows. B. The customer is structurally gone and only the houses that reposition recover. Which one do you think it is? Drop it in the comments and pick a side. If you want the line item walkthrough of every number in this video, the actual filings from LVMH, Hermès, Kering, Richemont, the Bain report data, the pricing receipts back to 2019, that's what Footnote brief is. Link in description and pinned comments. It's free.